Welcome guys to a simulation session. Today I'm gonna backtest IBDR ranges and see if we can identify discount and premium levels and how price develops within it. Further, I'm just gonna see if I can get a few entries based on this principle, and yeah, so I'm just gonna pick a random date first. Let me get that random date. Like this. So we have a nice date over here. That's 20th of September, I guess. Yeah. So let me see. 2019, 20th of September. That's a Friday, so let's start on a Monday. Get that FTMO balance. Have a fixed spread on Euro USD, 0.2 pip. A little bit of commission, of course. Let's see if you want to talk. I will unmute everyone. I think you can unmute yourself if you want to talk. So, okay, we have the date. Let's pull up the charts. Let's do a monthly down to the 15 minutes. And first of all, I'm gonna determine the bias using the monthly, weekly, and the daily, and then determining what kind of market model we're in, and see where we have an IBDR range where you can take a trade in the directional bias which you prefer. So let's open up these charts. That's it, and then put on a right template. Wait, I have a hell of a lot of charts down here. These are the wrong ones. This GU. Hey, what's up? My brother. We're just gonna backtest some IBDR ranges, and I'm gonna determine the bias on the monthly, weekly, and daily first, so we can see if we can get a market maker model and then trade accordingly. So template. All right, let's see. Go to the monthly, and what is happening right now on the monthly? Took liquidity up here. We're in a down moving motion, so we have a leg up, leg down. Probably price is wanna find some support on the monthly level, which could be this order block. So on the monthly basis, I would say it could still trade down, but we're halfway the month, so maybe this is the up wick for the month. Let's see on the weekly. We have a volume imbalance over here. There's a giant gap, which could be a target. So I'll put lines up there because price likes to go to those gaps. So I'll put a fat line on there. What's the range of this gap? So pretty big. It's 160 pips, 170 pips gap. It's pretty big. So what is happening on the weekly? Weekly is a little bit choppy, but still moving down. So we're actually respecting bearish signatures every time on the weekly still. We had this weekly fair value gap up here. We broke through it, so that's not really valid at this point. And then we have this order block over here on the weekly because we had a nice propulsion candle up here. So this is a valid order block. It looks like it's rejecting from it. So where would price want to go if it wants to go further down? Because we have balanced price, we have unbalanced price up here. So That's how many pips? That's like 200 pips, so that's pretty big. So on a weekly, I'm not sure what's gonna happen because we have a reaction of this order block, actually the mean threshold. So I'll have to see what the daily looks like. Alright, the daily is leaving equal highs down here. That's a really juicy target for if you want to get into cells. And actually, I can see already we have a fair value gap above this recently created high. This high took out this liquidity up here. So these were relative equal highs. Breakout, and then breakout traders probably got a little bit scuffed up here. But there's still room to go up. So if we anticipate the weekly candle to go up Monday, Thursday into that fair value gap and then move down, that would be pretty awesome. Also, let me see, there's not really, this order block up here is still not really unmitigated because it touched it here, but I'll have to see how price trades when we get into this region. I'm expecting that it will reject this area. Let's see, on the 4-hour. So I have those indicators again with the weekly open, the day of the week and the ADR. So in the ADR we can see the range. Let me copy this fair value gap, by the way, so we can see it on every time frame, and I'll make it a little bit lighter, like this. It doesn't swap colors. Or there you go. So on the 4-hour we can see we also have a fair value gap here. So it's a fair value gap inside a fair value gap. So let me put lines up here, make it a little bit thinner. So this fair value gap resides in the mean threshold of the daily fair value gap, which could be a pretty good area for sells, and that's also the ADR of today, but it's a Monday, so I'll let Monday play out first. Let me get the sessions. So let's skip ahead. It's Asia session, London session, trading down, New York session. Damn, it's moving 80 pips already. Alright, so this is Monday. This New York midnight. That's where we're at right now. So on the indicator list, let's remove Asia session from the 4-hour. Right, so we're trading down from the weekly open. So that's not favorable if you want to see like a Tuesday high of the week to sell down later. But let me see, the weekly is yes already heading down. So it doesn't have to trade above weekly open to keep going down, because this weekly lows target is pretty good. These two lows. We have displacement right now, so Tuesday might be a bullish day, and Wednesday we can trade down to eventually liquidate these lows. So what are we seeing right now on the 4-hour? Do we have an IBDR right now? That's what I want to test. So the high. So what's an IBDR? It's like it's the interbank dealing range. So there needs to be a high taken and a low before you can create a range of the IBDR. So we had liquidity here and here, and it's got taken by this one. So this is the high of the IBDR. Then we have this low here, which got taken by this. So this is the low of the IBDR. And the low of the IBDR is very favorable to get hit because we have those relative equal lows. So let's make the range right now. So this is the high. Let me get that red one. So right now this is the range we're trading in. Yeah, this is the range. So we want to identify the premium and the discount levels. So with a FIB tool, you can easily do it. Just do the FIB tool, and then equilibrium is the center point of this range. So everything above the equilibrium point is a sell, and above and below it is a buy. So let's get that midway point. Like that, and I'll make this one a little bit thinner, so no, thinner, and then dots like that. So I'll put in also the OTE area that's over here. Let's make that one orange. And then I don't know if I can flip the FIB, but no, I cannot do that. So I have to reverse it like this. Right, and then copy this one, and then we have the OTE for the discount. Let's make this one like a green for a buy, and then the premium level, I'll make it a little bit red. So no, pink, red, tomato. That's fine too. Alright, so this is the FIB. Great tool for the IBDR range. So let me copy the high and the low. So everything above this red dotted line is premium. We want to sell here, and everything below we want to buy. So our bias on the weekly and monthly is we should go down to fill up this huge gap, this volume imbalance. So now let's go to the daily. Let's see if I can scale fix a little. So actually the volume imbalance is below these equal lows. There's are 30 pips below starting. So ideally Tuesday trades up. I don't think it will create a high of the week because we already had Monday trading down. Where's my indicator? My daily weekly open. There it is. Weekly open. So the weekly open is up here actually. That's fine. I think this is still the range we're trading in. Let me copy this one. So on the daily, this is the range we're now trading in. Yeah, this makes sense. So price is respecting bearish signatures every time. We have one here. This is a fair value gap before. Also got respected, tapped, and then traded down, leaving this big order block which got hit over here, and the bodies keep closing in it or below it, so that's a good indication we're moving bearish. So now we have this big down closed candle which is 90 pips, and then this is one big order block. So anywhere in this order block you can sell, but we like to do it in the premium level. So 4 hour you have a fair value gap up here. The ADR is actually filling up the whole ADR. And let's see what the 1 hour looks like. Alright, so the 1 hour still has a fair value gap below here. So now I see two options. You can trade, you want to trade down, but you can also take a buy up if we don't get above here first, because we still need to rebalance this whole liquidity void. Is the little green candle of a day before on the daily the Sunday candle? Like on a daily time frame, you mean? Like this one? I think, yeah, it's the Sunday candle. That's actually terrible. I don't know why the broker puts in Sunday candles. It's like 14 pips. So actually we could assume we opened up here. So this is actually 1 hour because it's, if you look at sessions, yeah, it's only a few hours, 2 hours before the new candle starts. Keep that in mind. So let's go to the 4 hour. We have this fair value gap and the breaker. So this one could be a important PD array. This is a breaker. So this is there's a fair value gap inside a breaker, and on top of it we have a little order block. Yes, then that's the weekly open sending. Oh yeah, I see. So this area right now, deep discount, deep premium, or breaker block, fair value gap. Order flow is bearish still, in my opinion. We did not clear this low. So what do we want to see? Let's see what the Asia range looks like. The Asia range looks like, I have to adjust it because it doesn't fit. This is the Asia range. Actually, it's from 23, but if I put in 23 here, then it's gonna be a really scuffed ADR, scuffed Asia range. So I'll just put it like this. So let's see, we wanna be a participant in this breaker area. So let's clone that. Let's go to the 1 hour. So the 1 hour, we have this area, looks pretty good. Now we have this small block up here. This could be a mitigation for price to go down further. So that's 40, 50 pips. And that's a lot of Asia ranges, I think. So let me check how many Asia ranges that is. That's 1, 2, 3, 4. So actually that's fine. It doesn't really matter. Ideally, I want to see like 2 or 3 Asia ranges for a London swing and then a reversal. But we could have a trade down first and then just trade up all day. So we then have a classic buy day, and then we might reverse on Wednesday. So I'll see what London does first and see if we can get an entry on the New York session. So let's see the 30-minute. Oh, I forgot one important thing. The news calendar, very important. Economic calendar. So let's remove the low impact. We have some medium impact. We have Wednesday, we have FOMC. So that's probably why it's now consolidating around the equilibrium point. So FOMC is we also have federal phase runs, and they're gonna cut the rates. So that's actually, I think the dollar will drop because of that. I mean, I mean the dollar will pump, so the euro USD will drop. So that's actually not a favorable time to trade. But let's see what how Tuesday develops. Speed up the price. Oh, it's still creating an Asia range. Oh, we're watching the 30-minute. That's okay. The 1 hour. This is the Asia range. This part. So we're trading down from Asia straight away. So now I'm thinking we fill this fair value gap down here. And if we can see on the lower time frame a break in structure, I'm anticipating price to go further up. So this is all based on, this is the discount area and this is the premium level. So, and this part is unmitigated, so I'm still expecting price to come back here. That's why I don't think it will go straight down. So let's pull up the 15 minutes and adjust the Asia session. Maybe I'm just gonna remove this Asia indicator and draw it myself. So Asia session is from 4 to 23 on this chart. So that's from this candle. It's doji candle, and then like this. What's 4? This is 4. Yeah. So like this. Perfect. So let's see how many ranges down we can go. It's 1, 2, 3, and then we need to copy this line so I can see it on the lower time frame. Right, so two standard deviations down from Asia. That's good for London swing to New York reversal. So we could expect it go down to the fill the gap and then move up. I need to do skill fix. So we broke the low of Asia. We took this liquidity, took the high of Asia. So actually we have the AMD model, I think, right now. So it wants to move higher. At least that's showing for me. We have this consolidation right now. Then we have the manipulation that's down. So breakout traders are taking sells, and then it's reversing. So this is pretty good, I think. For if we zoom in a little bit more. Yeah, we broke structure right now. So where do I want to see like a buy? So we have a little swing down here, and then we have a fair value gap here. We have a fair value gap down here too, but I think it's gonna clean the recent low and then move up further. But it's also FOMC like the day after, so it could be a seek and destroy profile. So it's hard to see for me right now because normally I use Euro, GBP, and DXY2 for directional bias. So for instance, if DXY is like in a discount level, I'm assuming Euro USD will go down. And if the Euro GBP is in premium, it means Euro GBP is likely to go down, which means the Euro can get weaker. So it's gonna take a long time for Euro USD to move up. If you guys know what I mean. So let's assume this little area over here is going to be an area of interest. So that's 8 pips away. So if you really want to get in and have a conservative stop, you can put it like 15 pips down. If you think this will hold, you can put it like here. Then it still has breathing room to hit this fair value gap. So just for, actually we created we have this IBDR range, right? This is the 4-hour. So premium discount. We have created another IBDR on the lower time frame. So IBDRs can occur everywhere. We took the low over here, so this is the low of the IBDR. We took the buy side liquidity up here, so this is the high of the IBDR. So if you put a fib right now, so let's reverse it by the way, because it's possibly a buy. So if you put it like this, and you anticipate this is the high, then you're seeing OTE levels down here. So actually this fair value gap is not fair. Could you mute yourself, bro? Okay, I'll mute him. That's fine. Yes, it's recorded, Arun. I'm recording. So I wanted to take it up here first, but now we have this dealing range and it's still above equilibrium. So you like to trade, if you want to take buys, you want to take it in the discount levels. So it's good. I put the fib down here. So better to buy in this fair value gap. So let me see. So let's get this one over here. And this is all speculation, right? And it's a simulation. So in simulation, when I do simulation, it's like 50-50. I lose, I win, I lose, I win. So it's all about learning how to read price. And if I'm wrong about the trade, then what did go wrong? And that's for me, that's the most important to test. So let's just put in an order on this 62 level, because you can take it on a FIP level too. So that's 14 pips from here. 14 pips, and then conservative stop loss would be down here, like 12 pips. So let's just be conservative. Eventual target where we want to see sells. That's like see how the 4 hour broke the high already, so that's okay. We have a recently created bullish order block. This one is created in London kill zone, so that's order blocks in London kill zone are typically more valid. So we have, this is the 30 minute, so we have this gap on the 50 minute was up here and up down here. So this actually is better because it's the same gap on the 30. So let's put in, I was actually want to see the target. So the target is 40 pips. So that's a 3.5 to 1 scalp. So that's pretty okay. All right, 15-minute time frame. Let's get this order in. So on the 62 exactly, you could have a tighter stop. You could take the entry also in the mean threshold of the fair value gap. Might be a little bit better, and a tighter stop, so you have a better RR. But what matters most is that your stop loss placement is correct. All right. So if it moves up, the dealing range also moves up. All right. So right now, let me adjust this dealing range. So it's reacting off equilibrium. So that's also a thing you can notice. If you have the dealing range, equilibrium is the point where it can either reject or push a little bit down more to get an entry for discount. Speed it up a little bit. Maybe it took it took the fair value gap I initially draw out. So let's hope we can get a deeper entry. So this is just based on the IBDR, right? So this is also one thing I've noticed a lot. When you have that IBDR range and you have a failed swing, this is a failed swing right now because we took this liquidity and you would expect it to push further through, but it's respecting this last up close candle before the down move. So chances right now that we break down further are increasing. So I'm still gonna let this limit here, but just notice the chances are getting smaller for a buy. And FOMC is in like, yeah, the day after. So we can have a consolidation day too. So now we're breaking up. So my original idea of this fair value gap down here would have been better, but yeah, sometimes you miss trades. If you want to be, I'm pretty picky with my areas always, so I don't take a lot of trades. Yeah, what session we are? We are in New York session right now, so let's just have a quick look back what's happening right now. This order block is respected multiple times right now on the 1 hour time frame. So one could assume we're not coming back to my entry. But we did create liquidity. So we have a high resistance liquidity run on the 30 minutes, which means it's poking down in a PD array, but it cannot push deeper. So that's what happened on the 30 minute right now. So this is a high resistance liquidity run. So you always trade to the area where it's low resistance. It's perfect. Look, so it tapped the discount on the 4 hour. And now we're just probably gonna respect the bullish PD arrays, but let's see how it develops. Yeah, so this is pretty good. It doesn't have to trade deeper than equilibrium. Equilibrium point is also the point where it can price can say, okay, this is the point where I will go bullish or bearish. But for me personally, I like to trade it in the OTE levels because I'm the OTE trader, of course. No jokes. So we're 1 hour into the New York session. Let me pull up these Asia ranges so we can see how far it goes. So we have, so the target is almost met. So let's hold on. Also, my timer from Zoom will time out in like a few minutes. So I will send a link again so you guys can rejoin if you want. Man, 40 minutes flies by. Damn. But I will send the link in the Telegram again if you get kicked out of the meeting. So the target should have been way higher though. So I will remove that limit. So see, even though I missed this entry by like a few pips, what was I've missed it by 4 pips. The draw was correct, so I know it's gonna trade up. It's just a missed opportunity, which can be painful sometimes in trading. But oh well, I rather be picky and trade like 1 or 2 trades than take like 50 trades and get bad entries and have to sit in drawdown because I hate sitting in drawdown. It's really bad for my mental. I want to get a nice entry and see a good reaction straight up. So this area up here, we have a bullish or a bearish order block in that breaker, in the 4-hour breaker. It's exactly ADR. The ADR is exactly the body of the order block, which is pretty cool. I like how price matches up sometimes with different technicals. So 1 hour, 2 hours into the New York session. I'll skip a little bit ahead so I can see what's happening. So price moving up still. We're almost at our point of interest. So I don't want to take sells instantly because I don't like to take trades outside of kill zones. So because then your trade is sitting in Asia range, and Asia range is most of the time is consolidating, but it can also trend, so that's not ideal. Let's see. So another Asia range. So that's 1, 2, 3 range. Yeah, three Asia ranges and a bit. So actually can put in an order on this order block. So that's 10 pip. So let's see, that's 10.59. How many pips is that? 12 pips from here. Now I'm gonna not put the stop loss above here because we have a fair value gap up here. So when it overshoots the order block but still respects it, then I'm still in. So I'm gonna put it up here, and then we have a 16 pip stop loss, which is fine. If you're targeting like 200 pips, then 16 pips stop loss should not bother you. So we have a conservative stop loss right now. Also above that 4-hour breaker, so if the breaker gets disrespected, then probably price is just gonna move up further. Let me see what is price gonna do. This is a classic buy day, by the way. Accumulation, manipulation, distribution. So we're almost getting tagged. So we got tagged right now. Yeah, it's a big bullish momentum. So look, this order block right now, it's a 30-minute order block on the 1 hour. We're not really having an order block in that area, so that's not favorable. But we have these 2 candles. So it tapped, I don't know if it tapped it exactly, but a little bit below it probably. So that's why if my stop was here, it would be very tight. leaving equal low, so now it's going to push up further. So still respecting bullish order flow. So let's see how the 1 hour looks. The 1 hour is tapping, but the bodies are closing inside these two bodies. So there's still a chance it can trade lower. What does the 4 hour look like? It tapped the body of this one. So zoom out. It's going into deep premium right now. Alright, let's see what the 15-minute is doing. When I see this probability it will still move up because this high looks a little bit too clean for my taste. So it cleaned the high again. So we're on daily switch right now, and this could mean a stop out. There we go. So what just happened? We filled in this fair value gap on the daily, which was expected. So this daily candle was correctly expected. The trade would have been a little bit too early, like I said before, but there's probably still a chance to get in. So this is the 1 hour. And on this day, I think we have FOMC. Yeah. 6 o'clock, there's FOMC and the bank rates. So there are going to be some fireworks. Alright, so this is London. London open right now. And let me get Asia range. It's this candle to this one. Let's make it blue. So 1, 2. No. 2. So I'll have to resend the link for my Telegram. Hold on. So invite. So what is happening? What is happening right now? So on the 4 hour, we're respecting this order block, which could be a strong order block. The breaker was too early. So let's see if we can get a re-entry. So back to the 15-minute. And let's see what London session gives. London session is creating like an order block down here. So if I believe we're going down, I would like to see this order block get respected. It's a valid one too, because it had a strong bearish candle after it and it took liquidity. So let me see what it looks like on the 30, the 1 hour, and the 4 hour. 4 hours rejecting of this fair value gap, but this needs rebalancing at least. So conservative stop would be 10 pips. And then let's see how price reacts of this. Yeah, so it's disrespecting right away. This is a 15-minute time frame, so what does the 1 hour look like? True FOMC price action right here. So what do you do when you see this barcode? Personally, I would get out, but for the sake of simulation, premium area, expecting price to trade down. So I'll just keep it on. Wait, I have a 1 lot on. I thought I had 1%. So let me go back a little bit because I want to put 1% on. So the price is 1062. So I'll put it in here. Then what is the stop loss? So that's from 1 lot to almost 9 lots, so that's better. Okay, so let's continue. Let's see what a 30-minute looks like. H1, H4. Really expecting it to go down. We're in deep premium right now. We need to see, like, this 15-minute candle needs to go down. That's what I want to see, because we're in 1 hour into the London session right now. So if we're not moving down now, then I probably need to exit. Yeah, I definitely would put stops at break even right now. Even though it's only 10 pips, we traded almost 10 pips. But I would still put it break even because I don't want to see it trade back up into this dirty price area. Someone's at the door. Hold on. God damn it. Right, I'm back. Sorry, someone was at the door. Delivery guy. So, what's happening? We're trading down right now. And from here on out, I just want to see down close candles because price has no reason to come back up before the next 4-hour candle. And you can see right now we're trading down. So this is 2% right now. What you can do on trade management style, you take profit where you think price will reject. So discount PD arrays is a good point where you can take profits or partials, old highs or lows. That's also a PD array. So we are now in a 1 hour. Did I see a 1 hour? We are almost filling the 1 hour gap, so that's a good time to take some off. So just gonna remove this one lot and then close a little bit. I would close like 30% right now because we're trading a bigger range. You don't want to take off like at 2R, you want to take off like 70% because that hurts your long-term trade. Alright, so we took some off. We have 1,000 floating right now and 1,400 on the equity. So actually we're up 400 right now on the balance. So that's 0.5% up, even though we had a small loss on the beginning. Up here, this was an early entry on the breaker, but actually it reacted off a 4-hour order block. You can see over here. Still in premium levels, so expecting really to trade down and take out this eventually the low of the IBDR, but FOMC is also on this day, so let's see. FOMC is at 18, so that's, yeah, okay, so that's deep into New York session. For me, that's like 8 p.m. in the evening, I think. So we're trading down nicely right now. Only down close candles. We can see a retracement up in this inefficient pricing here. So this is a fair value gap on the 50-minute. Price can go back to this point and then reject again. I don't think it should ever come back to entry because there's no reason. So it should reject from this area. It can overshoot it a little, but overall I should think price should go just go down. So price has been rebalanced. Now let's see how it reacts. On the 4 hours pulling up, but still gonna stick with my bearish buys because we're in premium levels. Let's speed it up a little bit. So this is, yeah, we're trading down right now. This is not favorable because we're rejecting this order block. So we're still holding this order block where we took profit. Yeah, it stopped us out break even after securing the, on this PD array. So that's why you take partials on logical places. If I just want to hold it forever, then you get stopped out break even, you'll get mad, and it's not good for your mental at all. So I'm gonna speed up and see what FOMC is gonna do, and then I think it's pretty successful study on the IBDR range. Because if you look at the 4 hour, you can see exactly where the range is, like between the two red lines. And then discount levels get rejected, premium levels are more likely to trade down to. Overall bias for the week was bearish, but it seems like we're rejecting from this this bearish order block down here, or bullish order block, my bad. So let's see what FOMC does. I'll put in a 15-minute chart. Oh, there are many fips up and down here. Let me remove some. So, right, so FOMC is in, oh, it's in 15 minutes. So let's see the fireworks. One minute, I'll slow price down. So taking this liquidity down here, rejecting from this last down closed candle for now. But we're in premium, so I would expect it to go down further. Pulling up all the way. This candle looks good too, but it already got hit by this one. So I'll speed it up a little bit. Yeah. Now we're in a daily switch again. And Asia session, London open. It's probably going to rebalance all this inefficient pricing. And I'll pull up a 4-hour chart and I want to see if we can liquidate the lows like I had anticipated. So at least that draw would have been correct. So this is the 4-hour chart. I would expect it to trade down. So I'll skip the time frames right now. Oh, how are you doing, MH? So speed it up. So there we go. Yeah. So I don't know where my drawings went. I think the indicator just removed them. But this breaker still got respected and this order block too. So if you would have taken a high time frame trade and just took it off this 4-hour order block with a 10 pip stop loss, and you should have held it very long, by the way. This is really a swing trade. So the draw right now, I wanted to see it clear this low like I anticipated at the start of this zoom. So we cleared it right now. So seeing this as the draw was correct. The weekly didn't give as much as I would have liked because we're now in the next week. But the trading range is correct. So this is the IBDR. This is what I want to backtest. It's taking low liquidity on the low side, liquidity on the buy side, and then you have your range where you can trade in. And you can see discount level at the start of the week gets respected, trades back into premium. Premium is the perfect area for sales, and eventually it went all the way down. And I'm wondering if we can fill in this. This is just extra time, but I'm wondering if we can fill in this whole area. So I'm gonna skip weekly time frame right now just to see if that happens. And it didn't happen. So these are weekly candles, right? So this months ahead. Eventually we trade in it and then reject it. Then come back in. So what is this? Corona time. All right. These are the Corona candles. So yeah, if you guys have any questions, you can ask them. So I'll just stay here for like a few minutes longer, and otherwise I'm just gonna end the video here. just playing with the draw. Yeah. So no questions. So thank you guys from the Telegram who joined and wanted to take time out of the day to see what I'm doing. This is just a backtest session. One small loss because we entered too early, and then a winner. So ended up positive for this simulation. So I'll see you guys next time.